Good morning and welcome back to Coffee with Tom and Joanne. I'm Joanne Toronto.
And hello, I'm Tom Matthews. And today we are pleased to have John Conte with us. And he is the owner of Oliver Capital Management here in Concord, Massachusetts. And hello, John.
Hey, how are you? Thanks for having me.
Thanks for joining us this morning.
We are thrilled to have you, and we're excited to bring some very relevant information to our clients. John's here today to talk about term life insurance, and we wanted to set a little profile together for John to talk to everyone about. And the profile is a 35-year-old couple buying a home with a $500,000 mortgage, and talking about why it's important to have term life insurance, and general average of what it might look like for costs, because we know you've just bought a home, things are expensive, but why it's important to have this peace of mind put in place.
Yeah,
I
think people forget that real estate and life insurance kind of go hand in hand when you acquire a big asset, which is also a large liability. It makes sense to consult with somebody like John. So tell us a little bit about how you would handle this situation with this 35-year-old couple.
So most of the people that I work with are young families. So they're in that 35-year-old-ish range, and starting a family, a lot of times first-time home purchase, and almost immediately kind of something goes off, say, oh, I need to be an adult now. And now that the home is purchased, most people save their for years. They could buy the house, and it's like, well, what now? So it's kind of building up assets. And one of the biggest things that I talk with people about is, if God forbid something happens to you or your spouse, how would the other one continue to pay the bills, right? And one of the biggest bills now is the mortgage. Right. So, and not only the mortgage, but the mortgage and the landscaping and the taxes and all the things that go along with that. Right. And oftentimes people feel like life insurance is, one, really hard to get, and two, it's super expensive and just not really a fun topic to address. But what I find is that, especially since COVID, it's gotten really easy to get life insurance, because companies have said, you know what, we can't get blood and urine exams from people anymore, and we're either going to go out of business or we work around it. So oftentimes I'm getting people approved within 48 to 72 hours from start to finish, done, no stranger in the house, no needles or anything. And it's just a very easy way for people to say, okay, well, I have this giant mortgage, I have expenses, kids' tuition. How do I protect that and protect my family? And oftentimes it's just a simple term insurance plan. Mm-hmm. There's a lot of kinds of life insurance. There's probably 5 different kinds or 6 different kinds of life insurance. Mm-hmm. In my opinion, most of them are crap, and it comes down to temporary insurance, which is term, and permanent insurance, which is whole life. But term insurance, again, is what I say, look, get yourself settled, figure out your bills. We just need something super cheap that we can get in place. So it's kind of a long-winded answer to a short question, but Tom mentioned, you mentioned a 35-year-old. I would say, what kind of mortgage are you thinking? Like a $500,000? Is that
yeah, $500,000 mortgage. Let's just say A+, healthy people, no pre-existing conditions. Like, what would be the average range because they would each want to get a $500,000 or policy or something like that. What would they be looking at ballpark?
Definitely less than $100 a month for both. If they're in good shape, definitely less. Probably about 75. I would guess about 75 to $80 a month for both people, guaranteed for 20 years. It's a little bit more if you want to. If you want to go to 30 years, it's a little bit more. If you want to go 10 years, it's less. But most times we just do a simple 20-year term policy. You're talking about less than $100 a month, and again, like I said, there's really no surprises. It's about as simple as you can get. You pay your premiums, you're covered. At some point, you don't want it, you just cancel it. But that usually doesn't happen.
And that's great, because that's it's $1 million of coverage this family gets. And if something happens to one of the spouses, at least they have enough money to pay off the mortgage. And the surviving spouse can live there, free. Because something that, for people that don't know John, he and I talk a lot. And one of the number one things we don't want to talk about or ever see with one of our clients is a GoFundMe page. Because life happens, and no one wants to have something happen bad to their family, but you got to prepare yourself. And for $100 a month, when you have a $3,000 a month mortgage payment, it's pretty minuscule. So that's why we wanted to talk about this topic. Joanne, do you have any other questions for John? Because it's a great topic.
how do you approach, you know, how would you suggest that you start a conversation about this? Because for us, we're always looking to add value for our clients, and, you know, we want to provide, you know, strong referrals for them. But, you know, aside from the mortgage, you know, what other reasons do you think are viable that people should consider getting life insurance sooner rather than later? Like, so is age a factor? Talk a little bit about that.
So yes, good question. So every year as you get older, it gets more expensive, right? Because in theory, a 35-year-old is being insured to age 55, right? So then the odds of them going anywhere during that time period are pretty small. But if we go out 5 years, now we're insuring someone from 40 to 60. So, you know, it's all based on mortality tables. And most people want to see three things covered. They want to make sure that their mortgage is wiped out, right? So that their spouse has no more, essentially, you know, people think of, I have no mortgage, I have no more bills. So the mortgage is wiped out. Their kids can go to college without debt. And then they want to make sure that their income is replaced to a spouse if they were no longer here. So, you know, what we do is we run all the projections, and Cassie, who handles service, is incredible. And she runs a lot of the reports, and we basically show people this is how much you should have. And a lot of times people don't really think about it. I'm like, oh, wow, yeah, what would happen if, right? Because even if the mortgage is wiped out, I still have to pay the taxes, still have to pay kids' tuition. You know, and the people that tend to have generally, a lot of times I'm sure people that you meet that live a little bit above their means and have these crazy expenses, right? It's like, well, is your spouse going to say, you know what, let's cancel the country club, let's cancel, you know, the nice cars? Like, they're probably not going to do that. So we need to make up for that as well. But a lot of times it gets more expensive as you get older. People don't realize how cheap it is. The cost of insurance has come down dramatically over the last decade. And that's just a function of more players getting into the game, insurance essentially going online, right? So I mentioned before, being able to get insurance from start to finish in 48 hours. That eliminates the need for a lot of different, you know, overhead from insurance companies, because sometimes the underwriters don't even look at it. It's just you just get approved. So yeah, so those are probably the main reasons that it's probably cheaper than they're paying. They probably don't have enough, and you know, there's a good chance that there's some much better opportunities out there.
I think you just touched on something that's important to talk about, is that even if you have a term life insurance policy in place, or you have even a whole life insurance policy in place, I think it makes sense to, you know, be connected with somebody like you, John, where you can review those things, because life changes. You know, people have more kids. They don't think about that they're paying, you know, that they have to plan for a payment of another tuition or supporting another person in their absence. So how often do you think people should be looking at their life insurance policies and evaluating whether or not they're adequate?
I think every 2 to 3 years is good, just to have a conversation, but especially after life changes. So life changes are probably the most important time, and a lot of times it's somebody gets married, usually have a first child. What happens a lot is someone gets married, they don't do anything. It's like, well, we both work, we'll be fine. Then they have a child, and they say, okay, we need this, and they have one child, and then they just never review it again. And if you fast forward 10 years, during that time, they probably had maybe another 1 or 2 children. They probably increased their lifestyle. They got promotions, and they still have the same. Oftentimes, it's just $1 million term policy that someone says, you know, I bought from a buddy that I went to college with. I bought $1 million term policy, never looked at it again. So, so I think it's good just to have someone in your corner that you could just chat with and just review the types of contracts with, because, you know, these policies have features that people aren't aware of, or, you know, they're paying more for, they didn't realize certain aspects. So it's very easy for someone like myself to take a look at something and in a few minutes be like, here's what you should be aware of, at least. And
that's great. And even if the policy is not a policy that you wrote, correct?
Oh yeah, because most of the time, anything that they have in the mail, like I'll tell people, like, whatever you find in the mail that you've had, a lot of times people save papers, just send what you have, and usually you can be able to get at least enough of a gauge to figure out what kind of contract it is and how it works.
That's great.
It's pretty simple, yeah.
Yeah, this is all really good information.
Yeah, this has been really good information, John. Thank you for joining us today.
Of course.
Coffee with Tom and Joanne. Could you tell us a little bit of how people can find you if they want to speak with you about their life insurance?
Sure. So I'm based right in Concord and Baker Avenue, but always happy to live in Zoom these days. So I would say my website is